Welcome back. Healthcare is the best performing sector over the last 3 months as investors rotate out of high-flying tech and AI names in favor of better valuations. Our next guest is here with his outlook for the sector and his best ideas for 2026. Jared Holz is a healthcare strategist at Mizuho. Jared, before we get to what I think is the most interesting part of this, let's do the broad overview. Had a nice run.
Yep.
Is it over? Does it continue to 2026 for the sector?
I think it'll continue for a little bit. It's still been a multi-year laggard, underperformed the S&P by 20% in 2023 and 2024. This year, about a 5% laggard. So I think there's still room to go. It's been a nice 6 months, but I think there's a reason to be bullish.
You can have a rotation because people are scared of where they were, or you could have a rotation because people are happy about where they are. Which one is it for healthcare?
I think it's a combination of both. I think you obviously have to be cognizant of what's happening in big tech as the main driver of the market.
Right.
But I think we're finally starting to thaw out a little bit. I think the drug pricing rhetoric for me is the biggest thesis behind getting more positive on healthcare. It's been such a noisy year as far as drug pricing. We have the IRA kicking in next year. Most favored nations has been discussed. A dozen pharma companies have agreed with the White House on pricing mechanics. So I think that out of the way leads to a better year for pharma, biotech, and kind of anything associated with it.
I still have one more question before we get to the most interesting part, but walk me through the day in the life of a healthcare analyst who wakes up in the morning and the president has tweeted out that he wants drug prices lowered by 30% at 3 in the morning. What's that like?
It's nightmarish.
Is it really nightmarish?
It's been tough. I think it was tough in the first administration. I think even with Biden, with the IRA and trying to figure that out,
right,
difficult. And now with all the theatrics behind this second Trump administration, it's very difficult.
So do you wake up, cup of coffee, to the spreadsheet, put the new drug price in, and come up with a new PE outlook? Is that how that works?
I think it's a little bit more complicated than that.
Right, yeah.
Part of it is that, but the multiples in pharma have obviously, they've gone up a lot since all this pricing. So I think investors are finally saying maybe we can own the group now that the news is out of the way.
All right, let's come back to that, but I do want to get to this issue of biotech, which you think is the most interesting look for next year. Walk me through why that is.
Well, it's been a great 4 to 6 months, the best we've seen. I don't believe that the XBI, and that's really the best proxy for small and mid-cap biotech, has ever had 6 months of positive returns in a row, dating back to the genesis of this index.
So through some bull markets for biotech. So the fact that you're saying that about this stretch now is
Can they
really
get that up, the XBI up? I'd like to take a look at that. Because walk me through what the outlook is.
Yeah, so it's been a nice ride. I think a few things are of note. I think the negative narrative around drug pricing and so many of the things that we've talked about for the better part of 5 years are starting to evaporate a bit. You do have this narrative around interest rates going lower. I think that's helpful, although there isn't perfect correlation. I think it does help investors get their hands around this. The denominator of biotech stocks stopped increasing exponentially. That, to me, was the biggest reason to be bearish for so long. We had too many assets to kind of contend with and analyze. And then the other thing is there's been so much merger activity.
Deal mania.
20 deals over $500 million just this year in publicly traded equities, not to mention a bunch in the private domain, too.
What about the AI promise in this field? People are talking about the idea that the computer puts molecules together that humans can't do.
If anything, it's a positive, right? It's tough to say how dramatic of an impact it's going to have. If you ask the pharma companies, I think they've been using computer-guided models for drug discovery for the better part of a decade. So I don't think the industry thinks there are major shifts happening, but if you had to gamble on one way or the other, it's going to be more helpful.
I'm sorry, I have one more question on the politics of it. Is this a sector that you think is one where investors should be concerned because there's so much interest from the political world in the idea of, for example, when the president says health insurance companies are making too much money and basically sort of cramming down on that and all that influence, is that one where investors should be wary of the sector for that reason?
Definitely. I think that's been the chief variable that's caused its demise or underperformance over the past few years, for sure.